Thank you, Peter. Great to talk to you about EQT Holdings today. Let me start by giving you a quick overview of why Equity Trustees. So it's a heritage brand. It's the only pure play trustee business on the ASX. Others are embedded in diversified groups. They're very focused on high growth markets. The company's a leading philanthropic funder in Australia. The dividend yield of the company is 3.8%, fully franked, so 5.4% grossed up. So it's really healthy in the small cap segment. And we, in August, announced that we're acquiring Australian Executors Trustees from the Insignia Financial Group, and it's completing on the 30th of November. That's a really transformative acquisition for the company and will be earnings accretive in FY24. Now, the purpose of the company, it's really clear, and that is to basically protect beneficiaries, members of funds and investors. So it's helping people take care of their future. I'll just give you a little bit more detail about Equity Trustees. What sets us apart is a single focus on trusteeship. We provide trustee services in Australia in every area we can, given we only have this single specialisation. That's to private clients, fund managers, corporates and superannuation fund originators. We've got a trusted reputation and brand, 140 years of experience, and we're supervising just on $150 billion of assets. So it's a really large footprint in Australian financial services. Let me just talk about the acquisition of Australian Executors Trustees. It's transformative from the company's perspective, strategically aligned, a really compelling rationale. The scale will allow us to invest in products and services to assist our clients and also our employees. Earnings accretive in FY24 on a cash basis and funded by an equity raise of 125 million at a 4.7% discount to TERP, which was completed last week. And that's been the lowest discount of capital raisings in the market this year, and also funded by a $40 million additional debt facility. Now, our business is in three core areas. The first is corporate trustee services, providing trustee services to fund managers and sponsors and corporates, superannuation services to superannuation promoters and originators, and our private client business, Trustee and Wealth Services, providing traditional executor and trustee services. I'll just go through each of those in turn. The corporate trustee services, we act as a responsible entity for funds managers here in Australia. We also do that in the UK and Ireland with as an ACD or a management company provider in those locations. We also provide real asset services, debt and loan and securitisation trustee services, as well as custody for real assets. A look at Trustee Wealth Services in a little bit more detail. On the left-hand side are our life cycle trustee services of estate planning, estate management on death, establishment of testamentary trusts on death, and perpetual charitable trusts, where we run more than $2.5 billion of those trusts, granting $90 million per annum into the charitable and not-for-profit sector. On the other side is our specialist trust, Indigenous Trust for Indigenous communities, health and personal injury trust for those requiring court protection, active philanthropy, and funds management or investment management services to the charitable sector. And we're trusted by major financial services companies. I won't go through this, but this is a snapshot of some of the clients that we have, and all well-known names in Australian financial services. We have an unrivaled access to third-party service providers that help us build the funds and schemes and trusts that we run. So I think we're more networked than any other company. We have an open architecture approach, so we can build and configure effectively any scheme or fund design that people require. Let's focus on our strengths. We're a market leader in trustee services. We want to be in markets where we can lead, and we are taking that position in many markets. We believe the best practice trust and governance fiduciary side is absolutely core to our business. So governance has to some extent been found wandering in financial services in the last sort of 4 or 5 years, and it is the core of our business. It requires highly specialised skills and people, and it takes years to replicate getting those people into your business. We provide unconflicted advice and support, and it's really important that we've got a strong balance sheet to support the company. And this just shows the consistent growth of the company. On the left-hand side, we've got the funds under management, administration and supervision. That's the key revenue driver, and it's a great progression in recent years, despite the equity markets falling off in recent times. You can see it's translated to total revenue, and that's an even more consistent picture for the business. I'll just move on to the next slide. It shows the EBITDA results on the left-hand side, and with tight expense management and that revenue growth, we've produced really solid growth in EBITDA in recent years. It has translated to dividends, so a lot of these earnings are cash-based, and the dividend you can see there progressing strongly. Let me touch on the balance sheet. It's a strong balance sheet. Debt to equity is 3.6%, excluding some superannuation reserves that we have that are matched by cash. The majority of the balance sheet is cash, and the cash held on the balance sheet is held for regulatory purposes. We have surplus liquidity through the cash and excess cash over regulatory purposes, as well as our undrawn debt of about 50 million. So that gives us the flexibility to take advantage and growth opportunities. The industry presents us with good opportunities. There is a trend to the independent trustee model. Legislative change is driving an outsource of the fiduciary role, people looking for independence, expertise, and no conflicts. Compulsory superannuation is driving the growth in our superannuation business, as well as in our corporate trust fund services business. And also the ageing and the wealthier population is increasing demand for trustee services. So all of our business have got a solid underpinning of their growth. Now, it has been challenging times in the market of late, but our results have been resilient and solid across all of our divisions. The revenue growth and the dividend growth I showed before has been maintained through all of COVID and increasing. We've got healthy profit margins in all the divisions, totaling across the company about 40% of EBITDA, so really healthy profit margins. It's been a challenge to retain the talented workforce, but I think we're increasingly an employer of choice. Turnover has increased as it has for many businesses post-COVID, and this is a people business, but it's a very single focus of this business to attract and retain our talented people. And we've been able to be a big part of the community in the work that we do in the philanthropic sector, and we're very proud of the work that the company has in that position. Now let's talk about the outlook for the company. It will be continuing to focus our strategy as a specialist trustee. That strategy has really been delivering for us in recent years. The industry transformation that has been occurring with the banks exiting wealth and the fallout of the Royal Commission has provided great tailwinds for our business. The increased focus on governance and the regulatory change is another tailwind for our business. We'll continue investing in our people. The tech levels have been increasing of late, and we need to match that where appropriate in the market. We have flagged to the market a really targeted, clear technology developments over the next 18 to 24 months. An investment that is a significant investment that won't happen all the time, but it's certainly a 1 in 10 year type investment of about $2.5 to $3 million. So that's material for the company. The lower equity market levels of recent times will impact our revenue because revenue is impacted by market levels, but we have a very positive momentum in the pipeline for financial year FY23 and beyond. So hopefully that's given you a great snapshot of Equity Trustees. Thank you.